flippity flip flop flapping smokes, everyone. Foreigners are fleeing Chinese stocks at the fastest pace in history. You know why? Because they're beginning to panic. Because Xi is about to do the unthinkable. Ladies and gentlemen, what you need to know right now is the situation in China is going from bad to worse. You've all seen the videos about how China's collapsing, how their property market is collapsing, how the bank runs are happening, how China's in a huge financial crisis. But people, China is actually covering up how bad things really are. So all these people thinking, when is the collapse going to happen? People, it is happening right before our eyes, but they're manipulating the data, manipulating the facts, but money doesn't lie. You follow the money, and that way you find out what is really going on. So in today's video, this is going to be an action-packed episode. I've got so much information to go through, from Chinese stocks seeing their biggest losses in history, the yuan crashing, the economy crashing, Xi's recent comments at the 20th National Congress of the Chinese Communist Party, and the huge tensions that are escalating to boiling point between China, the US, and Taiwan. So everyone, let's not waste any time. Let's get straight into the news, the facts, and the data. So look at this, everyone. Foreigners flee China's stocks at record pace as panic spreads. Foreign investors are on track to turn sellers of Chinese equities for the first time ever for the year, as concerns about a lack of supportive policies from Party Congress and renewed COVID-0 push spook markets. So this is huge, everyone. Foreigners are fleeing Chinese stocks at the fastest pace in history. So what that tells me, even though the GDP came out better than expected, which I'm going to break down in a moment, there was a lot of very worrying things in the data that just came out. But even though they're saying this, again, they're cooking the books. You have to follow the money, and the money is fleeing. Panic selling hit markets on Monday following the nation's twice-a-decade political event, with the Hang Seng China Enterprise Index tumbling to its lowest levels since the 2008 financial crisis. Are you starting to connect the dots here, people? This is the biggest crash since the 2008 financial crisis, and things are only just beginning. I think this is going to dwarf the 2008 financial crisis because of the huge amount of debt that is in China right now, but not only China, the rest of the world. And with the tensions rising between the West and China, things are only just going to get worse. President Xi Jinping's consolidation of power was seen as a major risk, with expectations that the leadership reshuffle would bring a continuation of key policies like COVID-0. So I don't think people realize how big this is. What this is going to cause is, and what this is causing right now, is foreign companies that used to manufacture in China, they're starting to leave China. They're starting to look for alternatives like India, Vietnam, etc. But that's going to be a huge cost for these companies. They're even taking manufacturing back onshore in the US. So what this is going to lead to, and what we are in right now, we're in peak globalization. For the past 40 years, the US and the West has been able to offshore all their manufacturing to keep costs low, and that's why all the money printing from 2000 to 2008 didn't cause much inflation, but now we're going to have prolonged inflation because of this peak globalization. And if China continues this policy, it's just going to make more and more foreign companies leave China. China bears are growing by the day, as traders turn skeptical over the nation's economic growth due to its COVID-0 policy and a heavily battered property sector. The benchmark CSI 300 index dropped 2.9% on Monday amid the broader sell-off, despite the nation posting better than expected third quarter gross domestic product data. So again, people, the property sector is crashing. They're still doing full-on lockdowns, but somehow third quarter GDP data came in better than expected. And again, it was delayed. Look at this. China unexpected GDP delay blamed by analysts on party meeting. Now, if the data was so good, you'd think they'd be boasting about this during their meeting. But no, people, I think it was actually bad, so they had to delay it. They had to find some way to manipulate the data, and that's the truth here. And so what this is causing is China's central bank begin to panic, and they're trying to lure foreign investors back in right now. But again, this is very, very risky, because I wouldn't pass them to all of a sudden freeze foreign investors' funds if tensions between China and the US begin to escalate. Public Bank of China adjusts cross-border borrowing rules to allow more inflows. The China Central Bank adjusted rules to allow companies to borrow more from overseas, enabling more foreign capital inflows at a time when the currency is plunging to fresh 2008 lows against the dollar. So this doesn't look like strength to me. This looks like desperation. They're trying to tell foreign companies, hey, lend to our companies, everything's fine here. Well, you can't trust the data and you can't trust the books because they're cooking the books. So I don't think you're going to see many foreign companies lend to China, and if they do, they run a very, very big risk that they may not get the money back. And like they said there, the yuan is absolutely tanking right now and has hit new 2008 fresh lows. China's yuan nears weak end of trading amid growth concern. China's onshore yuan approached the weaker end of its trading band, and the offshore unit fell past the key 7.3 per dollar level following the Party Congress and threat of further outflows due to hawkish Federal Reserve bets. And this is what I've been talking about, everyone. The Federal Reserve is hiking interest rates like crazy, and this is causing currencies around the world to crash if they don't keep up with the Fed. Because right now, the China Central Bank is actually doing the opposite. They're actually trying to stimulate the economy right now when all other countries are tightening. Again, with their growth weakening, again with Xi gaining more and more centralized control and people worried about what he may do next, this is causing people to sell off the yuan in droves. But that's not the worst of it, everybody. Also, Chinese stocks that are listed on the New York Stock Exchange just saw their biggest drop in history. That's right, we are witnessing history right now, people. I just want to reiterate how bad the situation really is for China right now, because many people are overlooking it and thinking this is just all doom and gloom and nothing's going to happen. It is happening right now. China stocks crumbled in the US as worry over Xi spurs a record sell-off. The Nasdaq Golden Dragon Index of 65 Chinese stocks posted its biggest drop on record, sinking 14% to erase $93 billion in market value. The index closed at its lowest level since 2013, and the year Xi was named the nation's president. Major internet companies from Alibaba Group Holdings, JD.com Inc., to Beidou Inc. tanked at least 12%, while Pinduoduo Inc. plunged 25%, electrical vehicle stock NIO Inc. declined 16%, and Li Auto Inc. slid 17%. So look at this chart here. This is an absolutely brutal sell-off, people. Look at the peak we saw, the peak speculation 2020 of Chinese stocks listed in the US, and now they're absolutely collapsing all the way back down to 2013 levels, and I think it's going to get much, much worse. Because I don't care if these stocks fall 90%, I would not be comfortable investing in Chinese stocks right now. Monday's sell-off came after Xi packed the Politburo Standing Committee with 6 loyalists during the party's twice-a-decade leadership reshuffle, with the unprecedented power play demonstrating his unchallenged control of the country's top decision-making body. Because people, there's a very, very disturbing power play that Xi did at the closing ceremony of the Chinese Communist Party Congress. Look at this. People were saying here, don't worry, there's nothing to see here. He was just feeling sick, unwell, but it's clearly looking like he does not want to leave right now. And you can see Xi looking over at him, and the man on Xi's right is going to be his new right-hand man. Again, people, it still looks like he's wondering, why are you taking me? Where am I going? And I hope they weren't taking him out the back for some fresh air. Again, he's tapped Z's shoulder here. It seems like he's crying out for help. What is going on? What are you doing? And Xi looks very cold indeed. And the disturbing thing is, nobody still knows what happened to him. And all information of this man was scrubbed all over the internet in China. So this is proving that Xi's vision for one China policy is growing more and more closer by the day, and is showing that he wants to be leader for the rest of his life. And anybody that questioned him will be taken out. And why this is very worrying is because this may mean there may be nobody to stop him if he wants to go against the West. Because investors also worry the ruling party may stick to its hardline approach toward domestic private enterprises and tech entrepreneurs while ramping up military pressures on Taiwan. Because more recently, Xi warns against foreign interference in Taiwan, says China will never promise to renounce force. And what many people are unaware of what the Biden administration just did to the chip manufacturing sector in China, which is going to accelerate their pace of wanting to take Taiwan. Look at this, ban on US talent at China chip firms thwarts Xi's key ambition. So the Biden administration latest salvo of sanctions include restrictions on so-called US persons supporting the development, production, or use of integrated circuits at some chip plants located in China. Effective on October 12th, the measure is also broad enough to encompass holders of US green cards, as well as US residents and American citizens, capturing a wide swathe of senior executives at Chinese semiconductor firms. So what this pretty much means is the US is saying anybody working for Chinese companies could possibly lose their citizenship, and they wouldn't be doing this unless they thought there was some kind of conflict imminent that would be coming. And China halts LNG sales to foreign buyers to ensure its own supply. So people, what this means in simple terms is China, yes, it is collapsing. Doesn't matter what the data says, follow the money. Stocks have seen their biggest crash on record. Their property sector is seeing its longest decline on record. Retail sales in China is falling. Unemployment is rising, and Xi is now tightening his power grip, and he is getting to dictator level, and the tensions between China and Taiwan and the US are escalating, and I'm very, very worried that something may break out in 2023. This also means foreign companies are going to be leaving China. Foreign talent is going to be leaving China. I think globalization has peaked, and this is going to lead to higher inflation as US companies have to look for more expensive alternatives or have to pay to build new infrastructure at other countries or bring back manufacturing to the US. But everyone, what do you think about this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.